So, after a long summer hiatus, we're back in the studio, and I'm excited to have Rami Miransky here with us to talk about the dreaded tax HST. But the good news is that you are a rebate specialist, and so Rami's here to talk about how we can figure out how to get your money back. And I'm really honored because you spoke at the home show and you've agreed to be on my little podcast. So it's like I have a celebrity in the midst.
Well, thank you. I thought you were a celebrity. I caught your podcast
Only to my
on Laneway
children. No. Anyway, I was saying to you before, we connected over my spot on breakfast television,
Right.
and which was interesting because I got all these calls, and I was like, I love laneway suites, but that's not what I do only. And when you were explaining to me what you did, and I was like, okay, back up, like really. Talk to me from the beginning. Explain to me how, because it's a really unique position you've put yourself in the market. And again, I'd love for you to kind of tell listeners, viewers, how you got here, like what made you, because I think that's a really fascinating story.
Well, the rules I'm going to tell you don't only apply to laneway homes. These rules apply to all new residential construction.
Yep.
I came to do this business helping people get these HST rebates because about 10 or 11 years ago, my background is financial planning. And two of my clients built new homes. I helped them both get the rebate back. It's called the HST New Housing Rebate. So when you build a new home for yourself as your primary residence, or you do a substantial renovation on your home as your primary residence, and that residence can be anything from a single-family home to a mobile home to a semi-detached home to a townhouse to
Right.
a condominium, anything.
Yeah.
These rules apply to all of it. You can get some money back from the government. And the rebate is called the HST New Housing Rebate for owner-built houses. There's actually 3 HST rebates that are out there, depending on what you're doing and who you're buying from.
Which I think is fantastic because I'm very skeptical. There's no question about a lot of these rebates or programs that the government's put out. I mean, the reality is that the soapbox in every political conversation is we need more housing. We know in the federal election right now, it's just a spitting show between the two main parties really talking about how we have no housing. There's a scandal at the municipal level around housing. And it's because there's no housing and because housing is so expensive. Yeah. So to me, what I find so encouraging is that this program is actually worthwhile enough that you decided you saw an actual vacuum in the business that no one was servicing, that there was actually money being left on the table.
No, there's a lot of money being left on the table. Even today, 10 years plus later, I still find 60 to 70% of the people I talk to, and I network a lot with contractors and real estate agents and architects and designers, etc. And they're sort of aware that these rebates exist, but they're not really aware of what you have to do to get them.
Okay.
So when I say these rebates apply across all, and you touched on the subject of laneway homes because that's become a very hot topic now, these rebates also apply to laneway housing. People are building these things and they're not aware that they can get rebates for building these laneway suites or ADUs, accessory dwelling units.
Right.
Because they can be garden suites as well.
Yes, those
or
are
converted garages.
I think I saw a stat the other day that there's a great guy who is trying to kind of carve his way into the laneway business, and he follows how many permits go into the city for garden and laneway suites, and it's looking like 1 a week.
Well, I know that
and that sounds like nothing. You're like, okay, so we're going to have 52. But when you think about, if you think about the amount of lots that can even offer that, okay? You only have so many laneway suites in the city of Toronto or in the GTA. And then you also have to have a specific lot to be able to do a garden suite. Mm-hmm. It's very, very interesting. That's a big number to me. So, okay, so let's back up.
It's not to me, because I've probably done as many as that in terms of rebates for people. And that's just the tip of the iceberg.
So let's talk. I really want to kind of just put it out there for people who are listening Because there'll be lots of people who are like, oh, this is very interesting, but like, I'm never going to build anything. Who should be listening to you right now? If they're listening and they're like, I wonder if this is for me. Who are those people? Let's identify them.
Well, let's put laneway sides.
Yeah, let's put laneway aside.
So,
we know laneways for sure. We know garden suites, but let's go.
Anyone who has either built, so they've knocked down their home and they built a new home. And you drive around the city and they're all over the place.
So now you can do down to the ground and get Terry on warranty, or you can keep up 3 walls and not. Would the person who did the major, it's just still call a major renovation. If you take it down.
Substantial renovation.
Right, so it would still count.
You don't even have to take down any of the walls.
Okay.
As long as the interior of that home has been gutted 90% back to brick and stud, you will be eligible for the same rebate as the individual who built a new home.
And it has to be, that's the minimum, 90%?
90%.
And is that above grade, or does that have to include the basement?
It depends on if the basement is finished or not finished.
Okay.
So I don't, it starts to get complicated, and I don't want to get too weedy with this stuff.
I appreciate that.
So let's just say you build a new home, you tear down an existing home, you build a new home, you're eligible for what's called the HST New Housing Rebate for owner-built houses. You take your existing house, let's say it's a bungalow and you top it up, but you got the interior of the main floor. That's eligible for the HST rebate. If you take a traditional 2-story and you gut the interior 90%, that's eligible for the HST New Housing Rebate. Now the nuances with basements, etc., let's not worry about that too much, because generally if you're doing the top 2 floors, you're going to include the basement anyway. So you're eligible for the rebate. So that's one set of people who would use my services.
Okay, so let's start.
There's another set.
Go ahead, please.
People who buy new construction and who buy either for investment purposes or on assignment. For investment purposes, you'd have to apply for what's called the HST Residential Rental Property Rebate.
Okay.
If you buy on assignment as the assignee, you normally, if you bought a new construction, and you plan to move into it and moved into it, you get credit for the rebate on your statement of adjustments. But if you buy on assignment, the federal government, because there's 2 transactions going on here, one between the developer and the eventual purchaser, and one between the assignor or the assignee. The assignee, the person who eventually takes ownership of that condo, will not get credit for that rebate on their statement of adjustments. They must apply for it afterwards. And it's a lot of money. It can be $20,000 or $24,000. And there's limitation periods to apply.
And what are those limitations?
2 years from the closing. So I did and I've done seminars across many brokerages in the city, not Slavins.
Listen up, Darren.
Maybe that will come.
Yeah.
But there's a brokerage, PSR. I did a seminar at PSR. Yeah. At the end of the seminar, a young broker came to me and said, and this was May of 2021, we were just into COVID.
The mayhem?
Yeah.
Yeah.
The condo had closed in June of 2019.
Okay.
And he said to me, you're telling me that I can get an HST rebate for this condo that I bought, that I rented in 2019? I said, when in 2019? And this is, as I say, June.
Yeah.
He said, this was May, but he said, I closed 2 years ago coming up this June. I said, you're a month away from losing the ability to claim this rebate. I put the paperwork in, you got a check for $21,000. Found money. And for many people, this is found money. I've done these rebates for real estate lawyers who weren't aware of this rebate, for accountants who weren't aware of this rebate, for lots of real estate agents and realtors, and even contractors and architects who have built for themselves and were not aware that they could get this rebate back.
Well, I would think that contractors for sure, and having that conversation and saying to them. So I actually want to go back to that. So, and I talked to you originally, I have clients who bought an older home and renovated, are in the midst of renovating it to the studs. And, they have kept all of their receipts and all that. What's the process? Like, so here I am, I renovated a house to the studs. I've taken it down. I've now just spent a gazillion dollars, I'm sure. Or you have a contractor. That's another thing. Like this young couple did it themselves. Like they're of the trades. But what if you have a contractor? Like, does the contractor do it for you? Are you holding on? No. Okay.
The contractor doesn't want to be bothered with this paperwork for this rebate. And
by the way, they should. I have to tell you, no, I think that that's a great offering. Say, listen, I'll do it. Not only am I going to do this for you, but I'm going to go then submit this on your behalf and get you X amount of dollars. I mean, that would be a sale pitch for me. It's amazing that they don't do that.
Well, what I tell contractors is you don't want to be doing the paperwork because it looks like hieroglyphics. What I tell contractors, it should be part of your sales process.
Or they pass them on to you, sorry.
No, well, it should be part of their sales process
Yeah.
because if you can tell your clients, and normally these contractors are in competitive positions.
For sure.
Right? So they're dealing with other contractors. If you can give them, just like a real estate agent, if you can give them a little bit more technical information or valuable information that says at the end of the day you're going to be getting a check for $16,000 because you meet the definition of new construction on a renovation and definitely meet the definition if it's new construction, who do you think they may pick to be their contractor if you're saying
right?
And who do you think may upgrade? Maybe they'll put some.
I was just going to say, like, if someone was like, well, I don't know if I want to do that part, be like, if you do that part, you'll meet the 90% and then you would get X amount back. That's a great, like, I don't want to sound like a sales pitch. You're trying to talk people into doing what they don't want to do. But if I knew, you know, that I can just go a little bit further, but it might cost me less. I mean,
that's generally not normally the conversation because normally people will build a new home and if they're going to do a substantial renovation, they're not going to leave a little bit, part of it out. Let's, you know, that 10%. It does depend.
It really does. I mean, listen, I can appreciate that there are people who don't even think about budget or they buy something they know. But I think that there are people that really kind of look at stuff and say, well, maybe I'll do a little bit now. I'll do a little bit later.
Yes. No, fair enough. Yeah. And well, those people are eligible, you know, as your clients are when they're done. And you ask me what the process is. Yeah. The process is keep all your receipts. And I'll be honest here, with most major construction projects, there's elements of cash. It's part of the business, right?
Yeah, that's the other
People
thing.
pay
With
cash.
Contractors, I'd be like, they don't always want to give you all the receipts.
No. So you can only claim for what you have in receipts. You know, I got a call the other day from somebody who paid virtually all cash. I said, I cannot do anything for you.
Well, you didn't pay HST. So,
exactly.
Yeah.
Exactly.
You can't get back what you didn't pay.
And the government would say, well, you only got $20,000 in receipts here. How did you build this new home, or how did you do this substantial renovation? It might, you know, put up some red flags there. So I don't even want to go touching those kind of situations, nor do I want to go touching situations where people try to pay the construction out of, let's say, their corporations. These bills have to be paid personally by the owner of the property.
Oh, so if you have, so that's actually a very good point. So I have a corp, and let's say I buy an investment condo, pre-con, and I pay HST, and I'm going to rent it.
Okay. That's a different situation.
But then I'm not, am I eligible?
Yes, a corporation is eligible as an investment vehicle, yes. But a corporation cannot have the intention to move into it as their primary residence. They don't meet the definition of a person who can physically occupy that as their primary residence.
Got it. Okay.
So you can't buy a corporation and move into it as your primary residence and get the rebate.
Okay.
Now, process.
Sorry,
I
was like,
we keep diverting.
I know, but
process.
It's all good. Yes.
Keep all your invoices related to construction.
Okay.
And you know what are eligible and what's not eligible. Well, only those things that are subject to HST are eligible. So, building permit fees that you get from the city they don't charge you HST, so they're not eligible. But soft costs, survey, architect, designer, engineering are all eligible. HVAC design, all eligible.
Right.
And then all the labor and material, your contractor, your trades, your windows, your doors, your roof, your shingles, your countertops, your appliances, everything else is eligible. To get the maximum rebate for the HST, new housing rebate for owner-built homes, is $16,080 if you're taking an existing home and knocking it down, or taking an existing home and substantially renovating it. Based on that definition of substantial renovation. Right. However, if you buy an undeveloped lot, pay HST on that lot, and then build on that lot, the maximum rebate is $24,000.
Interesting, because you're double dipping on both.
Well, the government said, and that's why the rebates when you buy from a builder, a developer, on new pre-construction, that's why the rebates include an element of land, and you're getting back on $450,000 or more. The rebate is $24,000.
So in the process, who comes to inspect the home to make sure that it was actually done 90%?
There's no inspection here. They rely on your invoices. These rebates go to Summerside PEI. It's done by the federal government because they're the ones who handle HST. So you're not going to get an assessor who's looking at this file come to Toronto to make sure. Some of them are picked for assessment, and if they do, and that happens maybe 2 to 5% of the time, they will say, show me the invoice. You said you spent $50,000 on windows. Send us that invoice.
Right.
Or if they get a little more intrusive, they will say, send us your contract between you and the contractor that shows us or describes the scope of the renovation. Okay. And from there, they will be able to determine whether the rebate has met that, or the renovation has met that scope of substantialness to meet their definition of new construction.
So it sounds like you potentially will get more rebate if you're buying new, because it sounds like you got a $21,000 check for the gentleman who had a new condo, but $16,000 if you do a renovation is the max.
Unless, again, you buy land and pay HST on that.
Right, fair enough.
Because there's element of the tax you've paid on the land to the developer.
I see.
So you can get some of that back.
Okay. And that's why the condo it has a bigger rebate.
Right.
Interesting.
Yes.
Okay. All right.
Yeah, because between the two, the rebates are the same. If you bought land, paid HST on the land, and built a new home, your maximum rebate is $24,000. Presumably, the rebate is only the provincial rebate, because I could get into the nuances of the federal side of the rebate and the provincial side.
Yeah.
I tell people, if you live in the GTA, you shouldn't even be concerned about the federal side, because that only applies to homes that are worth, or condos that are worth $450,000 or less. You're building or buying in the city. We don't have any of those. We don't have any
here in
of
Toronto,
those.
unfortunately.
Yeah.
I find it really fascinating and this isn't the only government program per se that is not spoken about, but I mean, I just see so much opportunity and value add from even like builders, just to say, listen, when you're in your sales, when these pre-con buildings happen, they create a sales center. Mm-hmm. And especially now, I mean, it is tough. The days of buying pre-con and making money on assignment are gone. Flipping them. I mean, I have a client who bought a pre-con a couple of years ago who will be my first call after this to find out if he got it. He got the rebate back and, called me the other day and said, what's it worth now? Right. And I told him and he's like, nope, not yet. And so, those days are gone. People are not buying in. It's very hard. We actually had a real estate lawyer the other day who came in to chat with a brokerage who said, like, the builder contracts are crazy. They're dumping extra, $50,000, $100,000 fees, out of nowhere. This is a great opportunity for them to just add in, the value add of like, hey, if you're buying this as an investment, did you know that you could get $21,000 back afterwards? Like, it just shocks me that it's not being talked about. They may not want to do it. They might be like, here's the link. I mean, you just have to offer the information.
Yeah, but it's a bit of a red herring, because the way the formula works is they add that when you sign these agreements of purchase and sale with the developer, there's a clause in it where you assign the rebate back to the builder, and they will add it back to the purchase price. People are not, first of all, I get so many surprise calls from people who buy new construction, and I've signed an agreement purchase sale says I'm paying $450,000. When it closes, they're not paying $400, less their $450 less all their deposits. They're paying substantially more than that because they haven't factored in the HST.
I was going to say, and this is like so off
all
topic,
the
but
other
if you are
adjustments.
buying a pre-con, you get a cooling off period. In that cooling off period, if you do not take your agreement to a real estate lawyer, you are crazy. That's all I'm going to say. There's still great investments. Real estate is still a good investment. I've never been a pre-con fan. I just think they're very chancy, but I also recognize that real estate is so expensive and you have the ability over 2 years to be able to come up with a deposit. I get it. I think it's becoming like a definite option for many people, but you need to have that. It's like 40 pages. Like you need to have that contract reviewed.
What the developers should tell their clients or the purchasers is that if you're buying on assignment or you're buying for investment purposes, we will not give you credit for the HST rebate on your statement of closing adjustments. You will have to apply for it afterwards. There are dozens and dozens and dozens, hundreds of people who have not applied for this rebate.
For sure.
I spoke to a broker at Keller Williams about a month ago, and sitting here like you and I talking, just casually talking about this subject, and he said, "You mean those 2 condos that I bought a year ago, I can apply," and he bought them for investment purposes.
Yeah.
"I can apply for these rental rebates." Well, he got his first check. He and his wife got their first check about a week or 2 ago, $21,000. There's another one coming for $24,000. This would have been $45,000 up in smoke in another year. Now, maybe he would have contacted somebody else who would have told him about it.
Is it 2 years from occupancy?
It's 2 years from the date of closing. That's when you pay the HST.
Okay.
But you have, for investment purposes, there has to be a long-term lease in place. Now, if you had a long-term lease in place during interim occupancy, that qualifies as long as that renter is still in there during closing.
What if they had the renter in after they closed?
That's fine, but they can only claim for it when it's occupied. So let's say they close it June 1st, but it doesn't get occupied. They're having trouble renting it August 1st. They can only apply for it August 1st, but the clock has started as of June 1st. So they have 2 years from June 1st, 2023. Okay. So they have until June 1st, 2025 to make application. Actually, the end of the month of June 25, but that's what they have. So that's what I would tell is people are unaware that this money is out there.
For sure.
And I would say tons and tons of people are unaware that if they buy an assignment, they can apply for the rebate on new construction.
But
and
again,
if
not if you buy it to live in it yourself.
No, then it's taken care of on the statement of adjustment.
Okay. All right. That's fascinating. Thank you.
No, that's okay. On the laneway homes, and let's quickly talk about that. There's 4 major reasons for laneway homes.
They're all good ones.
One is an addition to your home. Rather than, and they're expensive to build, quite frankly.
They are, but you know what? There's some people getting into this space. Ben Gom, who is a friend of mine, who was at the home show with you.
Yes.
Yeah. He's doing one in Corsa Italia. I've got to have him back on. I want to talk about what he's up to, but. He's found a way of doing them a little bit more prefab, very affordable.
Well, he's using containers for the most part.
And that's the way to do it.
There's all sorts of different ways to build. Yeah. There's the standard frame design. There's modular homes that are out there now.
Yeah, the modular ones also.
Ben's model is with containers, etc. Yeah. All great models. The modular and container ones are generally much less expensive.
And they're so cool. Yeah. They're so cool, and that's the way they're going. Yeah. For sure. I mean, I think that if people are looking to build one of those, I mean, so for example, let's go back to this. So, I think Ben was promoting, promote Ben. He does such a great job, but the one that he's doing, it's a 2-story, $400,000, mm-hmm. not a drop in the bucket. Don't get me wrong, but when you think about adding onto your home, or even a rental unit, very affordable. Yeah. In the grand scheme of things. So what is the rebate? What rebate does that fall under?
Well, it depends on the end usage. So let's go to the 4 main usage.
Okay, sorry. Yes, go ahead.
The one where you don't have to consider any HST rebates, consequences, etc. when you build just an addition. Let's say you need space in your house and you don't want to do a formal addition, right. But you have enough room, let's say in your backyard or laneway, and you decide to build this suite
that you're going to use yourself.
That you're going to use. Extra
Okay,
office
fine.
space. You got teenage kids. You don't want them in the house with their, their friends. Let's send them out to the laneway home. Okay.
Yeah.
So that there's no.
By the way, they're as happy as you are. Trust me.
I'm sure. So that's just like doing an addition on your home. So you don't have to worry about, rebates, any HST consequences. So I'd say that's the least most frequent usage.
Okay.
Now, some people are building them for like Airbnb usage. There are some nuances there with respect to, hey, is the city going to allow us? But I know some people out there who are doing that. That is considered a commercial activity, commercial business.
Okay.
You can get, and now I can talk about ITCs, which are input tax credits, which HST that you spend on the construction of that laneway, they are all deductible. So if you have spent $565,000 to build that laneway home, you can get all $65,000 of HST back.
Okay.
Because the government knows that moving forward, all the HST that you are going to be charging those short-term renters is subject to HST, and then you will be sending that. And I got somebody a check recently for about $130,000. They were converting.
You heard it here
They were
first.
converting an annex home into 4 separate units, which they were going to initially use for long-term rental.
And then they turned it into.
And then they decided to turn it into short-term rental, so they got all their HST.
I can only
that they spent on
imagine
construction.
how happy their neighbors are about that.
Yeah.
So and then.
So that's so then the other two are. Let's talk generational housing.
Yeah.
Elderly parents, kids who can't get into the market. You want to downsize. You want to stay on your property, so you move out of the main home. You can move your children or whoever you want, or rent it, and you move into the laneway home.
Yep.
That is eligible for the same rebate that I talked about for people who tear down their homes and build new for themselves or substantially renovate their home. It is the HST new housing rebate. And depending on the value of that laneway home, your rebate can be greater than $16,080 because if it's worth less than $450,000, and I'll talk to you as a real estate agent about how do you value these laneway homes because they're non-severable. You cannot split them and sell them off. So what's the value of them?
That's changing, but it's going to be so what they're doing is in a couple of instances, and by the way, they've done it in Rosedale for years, is they create a condo corporation between the main home and the laneway home, and then you sell the laneway home as its own condo. That is part of the condo corporation. So I have a very dear friend who bought a gorgeous coach house in Rosedale. They downsized. I mean, it's stunning. And it was part of, and the main house has 2 condos in it. In fact, I'm going to see another one on St. George Street in the annex for a client, for downsizers who, and I think it's genius, right? So now all of a sudden you're looking at something from a square footage standpoint. Yes, not siphoning it off as its own house, but I think we'll get there. I really do. It'll be interesting how they're going to deal with it.
Because they're not severing the property. It's still part and parcel. So when they sell that property...
but from a value standpoint. Sorry, I was just addressing the value standpoint and how you would price it out.
Okay, fair enough. And again, it would not be worth as much as something that you could sever and sell separately.
No, for sure.
But that laneway home or that coach house, when they sell it, because presumably they're doing a substantial renovation... And they're selling it or they're renting it?
No. They bought it. It had already been built. They're not HST. Like this was just something that was already existing in Rosedale. Yeah. But there was another one that was sold in off Ossington.
No, and but what my question to you is it sold as a
It was sold as a condo. Yeah.
Now
with maintenance fees and
but it's new construction because it meets the definition of substantial renovation.
I have no idea. I was just addressing
that's a more complicated topic because it would be subject to HST.
Yeah.
And so people have to watch out what they're doing.
Yeah.
But in any case, so those going back to what we were talking about. We're getting into sort of complicated subjects.
Yeah.
Because when you build it for generational housing, let's keep it simple, and it has to be immediate family. Siblings elderly parents, children, adult children, or even ex-spouses.
Yep.
It is eligible.
Ex-spouses, can you imagine?
Some get along. It's eligible for the HST housing rebate for owner-built homes, HST new housing, right? Now, the last one, which is the most popular use, is for long-term rental.
Right.
And that's a 3-step process because the government says when you build new housing for long-term rental, whether it's brand new construction or conversion that meets that definition of new construction, it is subject to HST. But you're not selling it, so how it is subject to HST? And that's why I talk about the fair market value. You have to determine it.
Right.
And when I talk to real estate agents about how do we determine the real estate value, the value of that laneway home, I says, what is the incremental amount that the laneway home has added to their property?
Yeah.
And what's happening is generally it's not adding as much or more than the value of construction. So if it was worth, and I'm dealing with somebody right now, the real estate agent wrote an opinion of value, said, hey, the house before the laneway home was there is worth between 1.2 and 1.3.
Right.
And with the laneway home, it's worth about $450,000 more, so 155 to 1.7, for example. So the laneway home is coming in at about $400,000 and $450,000.
It's usually a dollar for
valuation.
dollar.
Yeah, usually dollar for dollar. For a number of various reasons, which we don't have to get into. So now you have that price point. So if it's worth $450,000, you owe the government, you have to self-assess. It's a deemed disposition. You are both purchaser and vendor. You owe the government 13% of $450,000, which is $52,500. I think that's the right number. But you can offset that amount with all the HST that you spent on construction.
Right.
And that individual that I'm dealing with right now spent a little bit more than that on their on the construction.
Right. Oh yeah, I'm sure.
So that offsets that liability in its entirety. So now they owe zero. And then you can apply for the HST new housing rebate, the HST residential rental property rebate, which on a $450,000 valuation is worth $24,000. So I've gotten quite a number of clients out there who've built these laneway homes, these rebates, and they've all come through.
Amazing. Yeah. That was a lot even for me. I feel like I have a gazillion questions. We might have to have you back to deep dive. But in case anyone is listening and is very interested in contacting you to find out if they're eligible, we'll put it all in the show notes, but where can they reach you?
Easiest way is my cell phone, which is 416-508-1202. Okay. Email is rmiransky, so first initial last name, MIRANSKY @gmail.com.
Great. And again,
and people should not hesitate. I'm happy to just take a call.
He will answer all your questions.
Answer all the questions.
For sure.
And they can get a little bit complicated depending on, the structure and who owns it. And I must say only the people who own the corporation, own the property can apply. But that can be a corporation, it can be a partnership, etc.
All right. Well, give them a call. And thank you so much. That was amazing. I learned a lot. And I will definitely be passing it along to all of my clients for sure.
Yeah, let me know if your client who's doing the renovation knows about the rebate. Let me know if your client...
I will, for sure. I'm going to call both of them. Trust me.
I'm happy to help them. Thank you. It's a pleasure, Rachel.
Thanks.
You're welcome.